Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Wednesday, the Australian dollar faced renewed selling pressure near the 60-day simple moving average, and from there the market has rejected and now questions where the next move could be. Given the fact that decline has found the support around 66.15 and respected it, let's see if the market can stage a rebound and therefore look towards 67.65 and maybe even a retest of those highs around 67.1020 where the 60-day moving average is. Given the fact that there is still bullish divergence from the RSI and the MACD, therefore could see the market eventually snap to the upside. Let's keep an eye on this pattern and let's see if the market can recover. As I always mention, traders should stay alert for potential rallies, continuing to monitor signals and adjust their risk strategies due to the extreme volatility that we've seen just recently. The euro faced downward pressure on Wednesday as price weakened ahead of this Thursday's Purchasing Managers Index, or the PMI figures. Also, caution from ECB officials regarding future rate cuts pushed the euro to a 16-week low. Nevertheless, the dollar found a bit more momentum and rises up towards the region of 104.35 after Richmond Fed President Thomas Barkin hawkish comments suggesting that the Fed's efforts to return inflation to a 2% target may take longer than expected and therefore limiting interest rate cut potential. Nevertheless, the market is extremely oversold and very overheated ADX. A bit of divergence coming from here, but also the MACD is also supporting bullish divergence, and therefore I'm not bearish at these levels. With the dollar overextended above 104, I expect to see a snap to the downside, and therefore the rally should see towards 108.25 to 109 for the euro. Let's see if the market can snap out of this down channel, which is seen roughly around 108.25 and therefore should ignite the move to the upside. The dollar yen, well, the market's still stretching higher and having broken above the recent area around 151 has left me neutral. I still feel the market is potentially ready for an ambush from the bears due to the overheated ADX, and therefore the market is poised for a down test back towards 150 to 148. But like always we've seen with dollar yen, the market just likes to squeeze and squeeze and squeeze. And therefore this is where we are. So therefore, in the short term, the outlook is neutral, as I mentioned, due to the break above 151. And I shall wait for potential opportunities that lie ahead. Turning to the sterling, the market posts a fresh 10-week low as market now eyes the Purchasing Managers Index, or the PMI figures from the UK and also from the US. Along with that, central bankers from the Bank of England and also from the Fed are waiting, so keep an eye on that as well. So there is still much to come and no doubt some volatility. Support now seen around 128.40.50 as key level, but I feel the market may soon snap to the upside due to the bullish divergence seen from the RSI and the MACD. Turning to gold, well, the market's posted an engulfing candle, having rejected the level for the second time, that is, from 2,740.60, and now looks to a down test that could see a move towards the region of 2,712 to 2,700. Keep an eye on this level because a break there may see further profit taking down towards the region outlined here at 2,650. With the presidential election coming up very close, along with that with safe haven demand from the tension in the Middle East, the market may actually find more demand and actually ignore this bearish signal and look on towards the top side of rechallenging it at 2,740.60. A break there will give further scope on towards 2,800 or even add a further fresh high of around $3,000. Wrapping up with oil, the market found a bit more to the momentum side overnight and now looking towards the region of $72 or maybe even on to $74 a barrel. Any pullback likely to be shallow as the market is finding from the technical side a firming pattern coming here and look towards those targets as mentioned, with support seen around $69.70 to $70 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the day.